From Deloitte Tax, welcome to the Tax News and Views podcast series. In this series, we talk to specialists from Deloitte about the latest business issues and developments. I'm Carrie Falkenhayn, your host for Tax News and Views. Today, we're talking with Jason Demopoulos. He's a principal at Deloitte and the leader of Deloitte's National Tax Controversies Services Group. We're being joined by Jack Trachtenberg. Jack is a principal at Deloitte and the leader of our New York Suite and Multi-State Tax Services Controversy Practice. Our topic today, in case you couldn't guess, is on the federal and multi-state controversy area, specifically talking about the life cycle in both of those areas and how they overlap and why you should think about them together. I know that tax authority examinations can be disruptive to tax department operations, and oftentimes the focus is on just getting through the examination at hand. But our speakers today are going to suggest you think about it a little bit more holistically. So Jason, I'll start off with you and give us your perspective on to what extent taxpayers should be thinking about the life cycles of federal controversies as well as state controversies in a synchronized manner.
Great question, Carrie, and thanks very much for the opportunity to present on this important topic today. In my view, taxpayers should always be considering potential state tax ramifications and state controversies when handling a federal audit and vice versa. We're going to discuss in greater detail some of the points of potential overlap, and there are many, but taxpayers and practitioners should always remain aware of potential federal and state ramifications of their federal or state controversy engagements. Even substantively, there may be significant overlap. For example, with respect to research credit controversies, some of the same principles that apply in the federal context may apply in the state context as well. From a federal standpoint, we're seeing increased assertion of penalties in a number of cases, increased assertion of economic substance arguments, and continued challenges with respect to entry into advanced pricing agreements, for example. Transfer pricing further continues to be a hot button issue in both the federal and multi-state contexts.
Yeah, thanks, Jason. I think your point on transfer pricing is a really good one. We're seeing that becoming an increasingly important consideration in state tax audits. I'd say, in separate return states in particular, transfer pricing is that much more important in the state context. There can be issues that may not impact the federal audit, but could be meaningful for state tax purposes. For example, which entity picks up the federal adjustment or the impact of apportionment at the state level. So you could have an ability to craft an outcome that's neutral for federal purposes, but beneficial for state purposes. And increasingly, we're also seeing certain industries being impacted by transfer pricing adjustments at the state level, particularly where there's intercompany transactions between non-combinable affiliates. We're seeing some states imposing or adjusting markups between these non-combined affiliates, and others are using what I'll call a version of the federal comparable profits method, which is heavily used by the IRS, as you know, in transfer pricing audits to disallow expenses. And so in this context in particular, there's a heavy focus on what may be perceived to be low profits in certain states. So bottom line is that taxpayers can benefit from federal transfer pricing experience in these state audits as well.
So overlap in the issues. So we need to think about them holistically. Jason, maybe just walk us through the federal tax controversy life cycle.
Sure. What I'm about to share, Carrie, will not be a robust in the weeds discussion since we don't have multiple hours to allocate to this topic. This is not intended to be a comprehensive description of the life cycle of a federal income tax controversy. I'm also restricting my focus to federal income tax exams, although there are several other topics that still fall within the federal controversy space, of course. So a taxpayer gets a notice of selection for audit. Sometimes this may come as a surprise to the taxpayer, other times not. I recommend that either the taxpayer or the taxpayer's representative contact the agent listed on the notice as soon as possible. They should ask why the return was picked up for audit to prepare to defend the return as efficiently and effectively as possible. Getting this information from the agent is critical, in my view, in determining audit strategy and thinking proactively about defending a taxpayer's return. A taxpayer should also ask for all currently identified members of the exam team, and then leverage both its own knowledge and that of its representatives to gain intelligence on those IRS personnel. Information document requests, or IDRs, are the main means by which the IRS secures information during an audit. Initial IDRs typically request books and records, including trial balances and general ledger detail, an org chart, and corporate minutes. The due date often coincides with the opening conference. Be thoughtful regarding deadlines with respect to IDR responses throughout the process. In a large business and international exam, all IDRs issued after the initial books and records IDR are supposed to be issued in draft format and subject to discussion with the taxpayer. Among other things, IDRs should be issue specific and they should request information that is relevant to the issue under consideration. Taxpayers should discuss any concerns they may have with respect to an IDR while it is in draft form. The opening conference occurs early on in an IRS audit. Preparation for that conference is, in my view, absolutely key. Much of an opening conference involves the service walking through their procedures and conducting an audit. However, the IRS almost always seeks to ask questions about the taxpayer and its business or operations. Taxpayers and their representatives should take care in answering questions such that they are providing only responsive information that is actually relevant to the period under audit. They should listen carefully to any questions posed during the opening conference and only answer questions for which they're certain their responses would be factually accurate. Those on the taxpayer's side should never guess or sort of speculate about a response. Save those questions for an IDR to ensure that their responses are truthful and accurate. For more complex transactions, taxpayers may want to make affirmative presentations to the exam team as well. Finally, there's also a 30-day window from the date of the opening conference to make informal refund claims with respect to affirmative issues. For taxpayer favorable items that were not reflected in the original return, taxpayers can, for the most part, submit these claims within that 30-day window and receive consideration of those claims without incurring the burden of amending their federal and state income tax returns, which can be numerous. The examination then proceeds with additional IDR issuance, and for large business and international exams, typically shortly after the opening conference, receipt of the risk analysis and examination timeline. The risk analysis will identify the issues the exam team has selected for further examination, the steps the team intends to follow in examining those issues, and the estimated time needed to examine each issue. Taxpayers should use that examination timeline proactively to keep exam on track and hold them to their schedule for the audit. Taxpayers should also use the risk analysis to define the scope of an audit. The IRS is entitled to identify additional issues, but I'd encourage taxpayers to use the risk analysis as the sort of outer bounds for an audit and then challenge the exam team should they identify any new issues outside the scope of the risk analysis. Later in the course of an audit, taxpayers may receive notices of proposed adjustment should the service disagree with their treatment of a given item. There are many different options to consider in responding or not responding to a notice of proposed adjustment, including, for example, whether to request the fast-track settlement process, whether to take a 30-day letter and proceed to IRS appeals, whether to docket a case in tax court and potentially go to IRS appeals in a docketed posture, in what form to litigate a case, whether to request competent authority with respect to a given issue, and numerous other options. I encourage taxpayers to consult with controversy practitioners to determine what options make most strategic sense in responding to a notice of proposed adjustment. Finally, once a taxpayer receives an examination report, should the taxpayer potentially agree with the agent's determinations, taxpayers should still carefully review all of the service's computations to ensure they are accurate. Taxpayers should also review the interest computations with particular care and determine whether any interest netting opportunities or opportunities to net overpayment interest against underpayment interest for particular periods may exist. This exercise can yield very valuable refund claim opportunities for taxpayers, and I'd encourage taxpayers to consult an interest computation specialist to determine if those opportunities may exist.
Okay, that's a great overview. So, Jack, maybe you can chime in here. So, you've got a federal audit started. What are the important state things to think about?
Yeah, thanks, Carrie. I think in terms of multi-state audits, a lot of what Jason just talked about apply here in terms of considerations. We often work with our clients to prepare for state tax controversies before they even begin. This can include periodic, what I'll call self-audits, where we go through and play auditor and see what might be something they're going to take a look at and be prepared for it. Or at the time of filing, increase due diligence and documentation around return positions we believe are likely to be challenged by state taxing authorities. In terms of the audit itself, setting the stage at the beginning of the audit, as Jason said, is critical with state audits as well. and how you respond to inquiries from the state is crucial. So to sort of sum it up, I always tell people I have two general rules. One is don't play defense. Understand your position. We all take positions or advise on taking positions on returns, and we know there's a justification for it. Understand that, assert your case in all aspects of your interactions with the Department of Revenue, and keep the audit focused to prevent unnecessary IDR requests. As a general matter, don't answer what's not asked and only answer what is asked. And if the state auditor is going to insist on obtaining certain information that you think is not relevant, ask them to explain why and get them to articulate their position. And rule number 2 is play offense. When you're in the context of an audit, you always want to try to resolve it at the earliest stage possible. But keep in mind that there are paths to resolution at the administrative level that often include ability of state officials to settle based on risks of litigation. There may be informal appeal forums that can be effective. But notably, unlike the federal context, many states have tax adjudicatory bodies that are independent from the Department of Revenue. And these forums provide opportunities to challenge assessments, sometimes with prepayment hearing rights, as well as refund claim denials without going to formal litigation. So when I work with clients, my goal is to resolve their state tax controversy as effectively and efficiently as possible. But being ready to take your case to the next level and having the state know it often helps to achieve that goal. To your point, Carrie, I would also say that in terms of the multi-state tax controversy life cycle, you need to keep in mind the interplay between the ongoing federal audit, if there is one, and your state audit. So for one, the federal and multi-state team should coordinate to determine the impact of any federal adjustments, especially if it's a hot button state issue that could be impacted by the federal, as well as if there's any opportunities for refunds or offsets at the state level upon reporting the RAR to the state. As we all know, there can also be heavy administrative burdens associated with timely filing the resulting state amended returns once the federal exam is resolved. Often, taxpayers must notify states within a short time frame following the final determination of the federal exam by filing that amended return. I'd say most states, that deadline is 90 days after finalizing the IRS audit. But note that states have different definitions of what a final determination is in terms of when the clock starts to file that state amended return. And just in terms of the impact, for example, keep in mind, California, they have the large corporate underpayment penalty of 20% for understatements of tax over $1 million. And that picks up any adjustments that should have been reported as a result of IRS adjustments. So it's a significant issue to keep in mind when you have an ongoing federal audit.
Got it. So what is the biggest takeaway for our audience to think about when they're handling their federal and multi-state controversies? And Jason, maybe start us off here.
On the federal side, Carrie, I just want to echo Jack's points about going on offense, telling your story throughout the audit, providing context, and emphasizing facts that best support your theory of the case regarding a given issue. I think it's critical to be proactive even before an audit commences, but certainly afterwards and remaining on offense. Second would be knowing your practice and procedural rules cold. IRS revenue agents may, in certain cases, have imperfect knowledge of the Internal Revenue Manual and IRS procedural rules. And it can be very important to know those rules to influence the content of IDRs and the timing of IDR responses, among numerous other items. The decision tree itself to consider receipt after receipt of a notice of proposed adjustment, as I mentioned, can be very large and complex. I'd encourage consultation with tax controversy specialists to weigh the numerous options potentially available to a client. And then finally, don't forget about interest and potential interest netting opportunities if you have overlapping periods of interest underpayment and overpayment. Those can be lucrative.
So from a state perspective, I'd say one, the existence of any federal audit can create opportunities as well as to both mitigate risk or generate refunds and offsets at the state level. Two, I would say leveraging federal tax experience can be key for state audits that involve issues like transfer pricing and can make a big difference in how state audits are resolved. Oftentimes, I find that state auditors are not as well experienced in areas like transfer pricing as some of us are and my federal colleagues are, and that can make all the difference in how the audit's resolved. Three, pre-filing due diligence can really impact favorably the timing and nature of the state audit resolution. Being prepared ahead of time for that audit can make the difference. And lastly, I'd say having a robust appeal strategy and the capability to handle that appeal can work to your advantage in resolving state audits at the Department of Revenue level, because most states do take into account what I'll broadly call risks of litigation in deciding how to resolve their audits.
Well, thank you both. You certainly made the case for looking at controversy in a more holistic manner. If our audience would like more information, you can connect with Jason and Jack directly via LinkedIn. You could also download the Tax at Hand app that you can find on various app stores. And there you can search and find a number of controversy related topics, as well as the weekly State Tax Matters publication. Thank you, as always, to our audience for tuning in. Live well, everyone.